Tesla has made headlines in recent years with its groundbreaking technology and innovative products. The company has revolutionized the way people think about transportation with its electric cars. However, Tesla is beginning to feel the heat and faces significant competition from other automakers. And Elon Musk has finally responded with a new strategy. This will be greatly in favor for consumers looking to buy a new Tesla. Join us as we discuss Musk's new approach and why this is a crucial turning moment for the EV market. Everything Elon Musk does appears to create drama, and that drama frequently puts a shadow over the electric automaker's success story as the globe slows down in expectation of market headwinds. Tesla was in a bind, as they were confronted with a weaker demand, slower sales, and a plummeting stock price. In response, Tesla has dropped the price of its most popular models by up to 20% in the United States and Europe. This featured a substantial price discount of up to $13,000 on the Model 3 and the Model Y in the United States, in addition to the direct price reduction. Many Tesla models are now eligible for the new $7,500 federal tax credit for electric vehicles in the United States. In some cases, this reduces the cost of some Tesla vehicles by as much as 30% compared to last year. This has caused a major shock to every other automaker, as Tesla is stealing demand and stealing sales from their competitors. Tesla has recently reported unprecedented demand across the board. So it's no surprise that most brand dealers are constantly increasing prices above the MSRP. However, Tesla is reducing prices, so if everyone was on the fence before, they now have a compelling reason to order. The price reduction comes as major automakers are introducing more electric vehicles, especially at the lower price point of the market, undermining Tesla's overwhelming market dominance. The price cuts, which are intended to protect Tesla's market share, also reflect Tesla's transformation from a market anomaly to a mainstream automaker. By the end of 2022, the average price of a new EV was approximately $65,000, surpassing even the recently astronomical new pricing of internal combustion engines. The number of vehicles on the market is increasing as supply chain issues begin to improve, and analysts are now looking to see which automaker will emerge as the market leader. Tesla was, for a long time, the only EV manufacturer in the US to produce a fantastic product with enough range and features to truly convert people from traditional vehicles. Currently, nearly every automaker and EV startup offers a competitive electric car that has decent range, features, and great appearance, making the product competitive. While Tesla's car lineup is more competitive in those areas, it is aging. The Model S this year is 10 years old, while the best-selling Model 3 is 6 years old. Additionally, aside from long-delayed Cybertruck and Roadster, Tesla appears to have a limited number of brand-new vehicles in the works. Therefore, Tesla appears to be taking a bold step, which they can do because, unlike most automakers, Tesla is actually profitable. As it fights with domestic automakers like BYD for EV supremacy, Tesla may be attempting to imitate a recent similar move in China. Tesla reduced its prices by up to 13%. This is the third time in recent months that the company has done so. The action in the United States coincided with the changes to the EV tax credit made possible by the Inflation Reduction Act. This legislation provides tax incentives for electric vehicles and batteries made in North America. Tesla's shares fell nearly 3% during Friday's midday trading. The stock lost more than 65% of its value since the beginning of last year, and investors are concerned that Tesla's sales decline will continue. Most people are also concerned about Elon Musk's erratic behavior and the distractions caused by his $44 billion purchase of Twitter. Margins will take a hit, but we like this strategic poker move by Musk and Tesla. In the meantime, Tesla will face increasing competition from other automakers, both domestically and internationally. Total EV sales in the US increased by approximately 65% between 2021 and last year, and only 4% of the 47 different electric vehicle models sold by automakers were Teslas. Despite US tax subsidies, Tesla's US sales climbed by 40% last year, and we think the pattern will continue as the market for electric vehicles continues to rise. If you reach this part of the video, you might want to like this video and subscribe to our channel. EVs remain more expensive than gasoline-powered vehicles in part because the batteries are so costly. Rising interest rates and the price of raw materials are keeping prices high for customers, which might have an impact on Tesla and its competitors' sales of electric vehicles. Tesla's price cuts its Model Y performance model, formerly priced at nearly $70,000, America's best-selling electric vehicle now begins at just under $57,000. Additionally, the base price of the Model Y long range, the least expensive model available, has decreased by $13,000 to $52,999. Its effective price for qualified customers drops to $45,490, below the $55,000 price threshold required to qualify for the updated federal EV tax credit, which is significantly less than the national average cost of a new car. Previously, only the three-row Model Y qualified for the credit because it qualified for a higher price cap. More models were omitted. The base price of the Model 3 was cut by $3,000, from $43,990 to $36,490, or $36,490 after the federal tax credit. This action has been welcomed with both acclaim and criticism, with some arguing that the price reductions are required to make electric vehicles more affordable, while others argue that the price cuts are unsustainable and will eventually lead to financial losses for the company. Others have lashed out. Customers who purchased a white high-performance Model Y in September for more than $77,000, only to discover that the manufacturer had cut prices in the early weeks of January 2023. That means that you could have purchased the same vehicle for $13,000 less. An investor described the move as a kick in the face for existing Tesla owners. He claimed that the price reductions for the new vehicles will automatically affect second-hand automobiles and could further reduce values. Since new vehicle buyers prefer the new car smell, he claims that the used car value could drop even further. However, other long-term investors in Tesla say that this is an age-old dilemma in the auto industry. Buyers purchase a vehicle only to discover a rebate offer that would have saved them a few $1,000s. This instance is even more uncommon because Tesla's rebates are larger than the norm and dealers' discounts are often limited-time deals. Overall, the decision to reduce prices on Tesla vehicles is a risky one, and one they will find difficult to reverse if they need to in the future. However, the move will make electric vehicles more accessible to the masses and make it much more difficult for competitors to compete. What do you think of this news? Let us know in the comments section. Also, if you liked the video and want to know more about everything EV related, you might want to subscribe to our channel.